Howdy folks, Jeff Camarda, Friday, April 24th, your weekend edition of my now daily videos. Relatively placid day in the markets. The U.S. markets are down overall for the week, but up modestly today, a couple hundred points on a Dow, really, kind of just some chop, no clear indication of the trend. And again, as always, we hope we have seen the bottom, and it's up from here, though I doubt, given the economic landscape and the other shoes still in the trees yet to drop, that is the case. So I'm still in the camp that we're going to see another significant down leg, though you will be pleased, no doubt, to know that we have contingency plans in place to kind of stage back in from cash if it looks like maybe we are near the bottom. Now, stay tuned for more developments next week. Again, not a whole lot to report on the market. It's been a relatively calm, though down week. Not a lot of really clear trends either way. I did want to, I'm kind of getting in the habit of using these as kind of teaching moments to share some financial education for those that have an interest in that. So today I'm going to talk a little bit about asset protection. And asset protection is protecting your assets from financial predators, user creditors, people that might sue you, the strange relatives, whatever, and that might attempt or succeed in getting a judgment against you for some liability that you have. And exposed assets in Florida are typically non-homestead real estate. That means you're non-residents in Florida. Your homestead, you're not other real estate besides your homestead, as well as retirement accounts, which are protected in Florida and federally. And these are things like IRAs and 401ks and pension plans and so forth, and also life insurance cash values, annuities. Again, I'm not a big fan of most annuities are outrageously overpriced, as is most cash value life insurance, but insurance and annuities do enjoy asset protection in Florida. But beyond that, other accounts like bank accounts in your name or joint names with your spouse, businesses that you might own, S corps or LLCs. Most LLCs don't have the secret sauce that gives them asset protection. Investment real estate. Most of your other stuff that beyond your home and your retirement accounts is exposed. And if somebody sues you and gets a judgment beyond what your liability insurance will pay, and you should have $1 million umbrella, most of you, as we've talked about before, and maybe a couple $1 million depending on your wealth level. But if the insurance company finds a way to weasel out of paying the claim, or if the judgment or the claim is for more than the amount of insurance coverage, then your other assets are exposed. And most are, in our experience, relatively soft targets. Again, besides the IRAs and your homestead, there's things that you can do, structural asset protection planning, that's relatively inexpensive. I mean, a couple of $1,000s typically, and pretty much bulletproof, provided it is done before a threat appears. Once you get sued, or once it's likely that you're going to be sued, that you have triggered some liability, there's really not a whole lot you can do. There's a thing called fraudulent conveyances that basically said, yeah, I know you. The judge might say that, I know you put it in your daughter's name, but you did that because you knew you were getting sued, so we're taking it back out of your daughter's name. You're going to have to pay it over to the plaintiff, that kind of stuff. Anyway, that's just a taste of asset protection. Planning, you probably should consider doing this, almost all of you. And if you'd like more information, get with your Camarda personal wealth advisor, and they can tell you more about what's involved. Okay, have a splendid and peaceful and healthy, productive and positive outlook weekend. Until Monday, this is Dr. Jeff Camarda wishing you all wealth, health, and prosperity. Talk to you soon. Bye-bye.